From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, September 27th, and we are back on the HPS Insight Macrocast with our friends from Markets Policy Partners, John Fagan and Brendan Walsh. John and Brendan are in D.C. I'm up in Unga land in New York City, battling traffic in every direction, motorcades and everything else that you have just to try to get to your home or your office is a challenge. But for a very newsy week, and we, you never know what kind of surprises you're going to get. Our surprises this week have to do with impeachment, but we have some breaking economic data this morning too. So why don't you guys give us the readout on the numbers that we saw this morning, and then I want to talk about how impeachment may change our outlook and what impact it might have. There's a lot to dive into. Let's start with the numbers.
Yeah, so we got the personal income and spending today, and income was quite good, up 0.4%, but spending was a little weak at only 0.1%. And then in terms of people's assumptions on third quarter GDP, obviously spending is a huge part of the U.S. Economy. So the third quarter estimates were a little bit above 2%. So I think over the course of the next week or two, you're going to see that that consensus come down. These data probably will have to subtract as much as 0.5% from some people's estimates. So not the end of the world, but we're tracking below 2%.
No, that's a pretty big. That would be a pretty big readjustment. I mean, most of the regional Fed estimates I saw were in the plus 2.5% range. So you're talking about bringing them potentially below 2%, which would cause some political concern also.
Right. And then within the same report, we get the inflation data, the personal consumption expenditures inflation index. And this is the one, the core, which takes away both the kind of the more volatile food and energy components. And that's what the Fed tracks. And they want it to be about 2%. And this one came in at 1.8% on a yearly basis. So a few months ago, at the beginning of the year, the Chairman Powell cited low inflation as a reason why we needed to cut. Back then, it was at 1.4%. So now when you kind of look at these details, probably by January on the core component, we'll be at 2%, which is a little bit of a tough dynamic for the Fed, where you kind of see that slowing consumption. Maybe it has to do with the trade headlines and the consumer getting a little worried. But you actually have the inflation. We're not runaway inflation, but the inflation is actually getting back to where their target is.
Yeah, and earlier in the week we saw the preliminary purchasing managers indexes, PMIs, for the U.S. and overseas come in for September, and the U.S. looked pretty good, and it was basically upside surprises across the board. We've had some other. The data has been something of a mixed bag this week, but it has been, it really hasn't given the market a lot of direction. We saw, strong data, the PMIs coming out on Monday, and the market reaction was really muted. Treasury yields really didn't go anywhere, and the dollar didn't do very much. And that was even when contrasted against really dismal readings out of Europe. And, later,
China's been weak, too.
Yeah, and we got Chinese industrial profits, which looked weak. We got South Korea's trade data for the first 20 days of September, plunging almost 22% year on year. Overseas data still looks pretty shaky, and as the week went on, we got a little bit of some of that began to fuel a dollar rally, but Treasury yields kind of wavered back and forth. We got Fed speakers, a barrage of Fed communications yesterday, and it was they were all over the place. Some Fed officials talking about how basically downplaying, again, it was downplaying the duration of this easing cycle, and Minneapolis Fed President Kashkari saying he was pushing for more, and Vice Chair Clarida sort of splitting the difference and talking very technically about inflation nuances. the markets just haven't had a lot of direction this week from the data, and so maybe we'll talk about next week's data as well, but later in the show, maybe that'll.
Yeah, these are wrap those both in together.
Yeah.
Well, look,
but maybe the political drama now trumps any of the economic data.
Yeah, we've talked a lot about we've had a lot of political drama over the past 2.5 years or 2 years and 9 months or whatever we're at now. But this is the biggest drama. I think it goes without saying. It's we've only had articles of impeachment drawn up for presidents 3 previous occasions. So it's over a couple hundred years. So it's a pretty big deal.
So Tony, what exactly does it mean, impeachment? How does the process work?
Yeah, impeachment actually goes back to old English, how you remove an official from office, the reasons and causes and process for removing an official from office for. Really, it's people tend to equate it with some sense of breaking the law, and it's because the language in the Constitution talks about high crimes and misdemeanors, but those aren't defined in the Constitution at all. If people who look for definition for what exactly constitutes the kinds of abuse tend to go back and read Alexander Hamilton and the Federalist Papers, who talked about just offenses that proceed from misconduct of the public office, and particularly for political purposes, so non-official. But they stand for political purposes too. So the point is that it does not. You don't have to break the law to qualify for a high crime and or misdemeanor. It's really what's in the eye of the beholders, and the beholders are the 435 members of the House of Representatives. They're the ones who initiate the investigation. We saw Nancy Pelosi, the Speaker of the House, this past week announced that they were moving forward with an impeachment investigation. She ordered her committees 6 committees to go out and continue work that they had started already, but to go do their work with the intention of reporting it to the House Judiciary Committee. And the way it ultimately works at the end of that investigation is that the House Judiciary Committee, the expectation is the House Judiciary Committee, although the Speaker of the House could take it upon herself. We expect the Judiciary Committee will take the lead and draw up articles of impeachment that will be put on the floor of the House for debate. They'll pass a rule on consideration of it and debate it and vote. And if it passes with a simple majority, then the president is said to have been impeached. It does not mean he's removed from office. Mm-hmm. The next step is that the impeachment goes to the Senate, and the Senate, where it is a much more elaborate and unique process, the proceedings are overseen by the Chief Justice of the Supreme Court. So Justice Roberts would preside over the proceedings. It's very much like a courtroom trial. People who remember back in the 90s when President Clinton was impeached, you can go back and look at that video and see it. It's like a courtroom drama. The president, the House appoints managers, which are essentially prosecutors who go make the case against the president. I should say this isn't just for presidents. Any office holder, numerous. Yeah, right. So federal judges have been impeached. Mm-hmm. You could be a secretary of, a secretary of any executive authority can be impeached by the Congress. But it's the president. The president will appoint his own defense attorneys, which could be sitting members, or it could be a personal attorney. It could be anyone that he names, or team that he names to defend him. And then the Senate's required to get 2/3 of the vote to remove him from office.
Does this process give them special subpoena powers, or is it just kind of the normal powers of Congress?
Well, Congress has, in the past, Congress felt it needed to pass special subpoena powers. You go back to the Nixon impeachment. They needed to establish special subpoena powers in order to get evidence from the administration and call witnesses. But in the intervening few decades and through multiple investigations and another impeachment proceeding, there's the committees of jurisdiction have subpoena power. They don't need to do anything special to do it. They can. It doesn't mean that there won't be fights over getting that information, but I would say that talk to legal experts and people who. Legal experts who I know who both worked in White Houses and as Solicitor Generals and other the Supreme Court, their view is that once Congress has made the decision to open formal impeachment investigation, it has broad latitude to solicit information from the administration, and there's not a whole lot that the administration could do because it is a constitutional act that they're doing. So look, if you ask me, my outlook is that I don't believe Nancy Pelosi would start this process without having the intention of finishing it. She knows the caucus in our House very well. I expect she's going to, that they will move forward.
Do you think she wanted to do it, or she was kind of?
I think that I think the information that came out this week on the whistleblower, the president acting not as a candidate or even executing a constitutional act like firing. The FBI director is certainly allowed to. Any president's allowed to fire anybody who works for him. And so, as we saw in the Mueller investigation and Russia-related activity, that all stemmed from campaign activity when he was not the president of the United States. This activity stems from acts while he was president of the United States, acting as president of the United States. And if the evidence that we've seen is true, that the allegations that he used his official authority and his own personal authority to request that a foreign government take action against an American citizen who happens to be a political rival and the most likely opponent in the next presidential election. So so that probably qualifies for Alexander Hamilton's standard of abuse of the office for political purposes if it's proven to be true. I think that the House will probably, if I'm looking forward for markets and how people should be thinking about it, the House is very likely to convict on that or to impeach on that evidence and what else that they, depending on what else they find.
But I guess for the markets, it's the Senate that matters, right?
It's the Senate that matters,
and not just for the markets, but for the country.
And for the president and this whole administration. Yeah, so there's lots riding on it. I see no inclination on the part of Republicans in the Senate to be eager to convict the president, and unless there's something there's more that comes out, more evidence or more actions that convince them. They tend to stick together. Getting 2/3 majority of the Senate, which is what would be required, is a tall order, and so I think it's going to be difficult to do. And remember, this will be happening in an election year, right? And you can imagine Republican senators saying, "Look, the House took its action, but let's let the people decide." They're going to get to decide in an election in November, and I expect that will be their position. And so I think we're facing uncertainty for a while. And
so once it gets sent to the Senate, can they do they immediately have to take it up, or is it at their discretion and how quickly they want to move? And
that's an open question. Well, we're gonna have to wait to see. We don't know. It's the presumption has always been that the Senate has to do it, and but it's not clear that Mitch McConnell has to do it. Remember, Mitch McConnell is the guy who sat on the Merrick Garland Supreme Court nomination for a year, and which hadn't been done before, and so this he's not going to be bullied into doing something he really doesn't want to do. So his caucus is going to would have to be feeling a whole lot of pressure for him to move in this direction. So I think, look, there's a lot to I think this is what we're going to be talking about for the next year, along with the trade. And maybe why don't we take a break here and come back and talk about what this might mean for economic policy making and some of the specific issues that we're going to be that could be or might not be impacted by an impeachment inquiry. We're listening to the Macrocast. We'll be right back.
HPS is excited to introduce our listeners to a new podcast for our friends at Clover Health. If you or a loved one are looking for a new podcast with cutting-edge health tips for seniors, then make sure to tune in to Clover Health's new Healthy Aging podcast. Geriatric cardiologist Dr. Kumar explores your most pressing health questions with practical tips on everything from the best diet for heart health to when to get your flu shot and even how to clean out that pesky earwax. As a Medicare Advantage company serving seniors across the country, Clover is committed to providing real-life advice to help seniors get healthier and happier today with the Healthy Aging podcast. Whether you're an older adult, a family member of an older adult, or a caregiver, this is the show for you. Find Clover's Healthy Aging podcast wherever you listen to your podcasts.
Okay, we're back with the Macrocast. Tony Prado, Hamilton Place Strategies. John Fagan and Brendan Walsh at Markets Policy Partners. So we get this bombshell impeachment news, and John, what was the market reaction to it?
On the day. It was an adverse market reaction. We got what they call on Wall Street a risk off. We had selling, not anything torrential, but a percent give or take losses in U.S. equity markets, which really is we're only a percent below all-time highs, so you got to put it in perspective. So in the grand scheme of things, that was not a terribly virulent reaction, and we got a modest risk-off reaction through the rest of the Treasury complex and so on and so forth. Some flight to safety, but quite moderate. And we saw. The very next day, we saw a rebound, and almost all of that downside in the S&P 500 was retraced in most of through Wednesday's session.
Right. And
some of that really is, part of it is down to the distinction between event and process. Financial markets and certainly risk assets and S&P 500, chief among them, react to that headline, that event, and Tuesday's event was really Speaker Pelosi finally turning. Pivoting toward backing impeachment and calling for the official impeachment investigation. And then once that was done, it morphs into a process that will be long, that will be torturous, but it's easier on a day-to-day basis for financial markets to kind of tune out of that process. Now, there are always headline risks. When we saw the news yesterday that the whistleblower was a CIA official, that that dented markets a little bit, given the fact that that the implied credibility of someone in that position. But it really has a quick shelf life, and as long as financial market participants have in the back of their mind that the Senate is the final backstop on this, has the final word, and they are not going to be removing President Trump anytime soon, with what. Even if evidence continues to build, it's still very unlikely that they would not allow him to finish his term. Mm-hmm. And with that backstop, they can kind of pivot to, obviously we'll see reactions to headlines as this goes forward, but they have pivoted very quickly to focus on the secondary effects. What does this impeachment, what does this increased domestic political pressure on the president mean for other policy streams, chief among them the U.S.-China trade negotiations?
Right, because the president, ever the puppet master with the market, certainly got an update when it was at the UN that the market was down. So he goes out to the press and says, we're ready to cut a deal with China, and we also did one with Japan. Hooray!
Well, that's a very interesting point you make. The fact that, and we talked about this yesterday between the three of us and the rest of the folks here at HPS that were discussing it. It was it's hard to get a clean signal from Tuesday's impeachment announcement, because at the very same time, President Trump had made a hardline speech at the UN about China, basically calling out Chinese trade practices and Iran. And it was a notably hardline attack in a very, very public and high profile platform. And there was a sense there that against the backdrop of this increasing drive toward impeachment among House Democrats was that, geez, maybe this domestic political pressure will push President Trump to take more chances, to be even harder line against the Chinese, to whether to shore up his base or whether to distract from the impeachment inquiry. Who knows the reason necessarily? But as Brendan alluded to, the very next day he was out in front of the press saying that a China trade deal could come very quickly, and I think that
they want it badly. They want it badly.
Yes, that sort of validates the baseline market expectation is that this impeachment inquiry makes it incrementally more likely that President Trump cuts some kind of interim deal with the Chinese. And this
administration has proven to be a one issue administration. So
no question. Yeah.
Is it going to be trade, or is it going to be your political livelihood?
Yeah, I was on the phone with the chief economist with one of our overseas clients this morning, and having this discussion. What it means, and I felt, look, we make the case that was just made, which is that Trump is, especially heading into an election year, and he made the case that in an election year, Trump would be more likely to want to get a deal, whether there's the impeachment pressure or not, to sort of show his ability to get a deal and get something done. But also just a sense of, time is running out and get closer to the finish line, that pressure. I said, that's true. I said, but don't forget, we have felt all along that the Chinese are their clock runs at a different pace. And, people felt that the Chinese could run out the clock on this administration when people felt it had this view 6 months ago. Well, you're even closer to the potential end of this administration today. And you now have to have the question, if you're the Chinese, who exactly am I negotiating with? Am I negotiating with a guy who's not going to be here in 6 months? Am I negotiating with a guy where the political ramifications of this, if not the legal impeachment ramifications, but the political ramifications are that he's, unelectable for a second term, or does he beat this thing just like, the people thought that, that he was out with Mueller and Republicans rally around him, and he's, his popularity among Republicans is still very, very strong, and Democrats still have the real possibility of nominating someone who is, very popular on Twitter, but not very popular in places like Pennsylvania, Ohio, Michigan, Indiana, and Wisconsin. And so, if you're, the Chinese aren't stupid. I mean, they do political analysis also, and so the Chinese may decide to wait this out, and especially since we're really talking about. We're really talking about a year now.
You're right.
Oh, sure. If the Chinese take their ball and go home, then the markets are going to have a very, very different reaction than we've seen. As we saw in the escalation where President Trump upped the ante in early August on tariffs, the market kind of took it in stride until the Chinese started to retaliate. And it was there's a comfort level certainly on Wall Street with President Trump's pressure negotiating tactics. And the real risk that most of our Wall Street contacts express when talking about that is that he pushes the Chinese too far and they say, forget it, deal's off, we're going back to Beijing, we're going to wait for the next administration. And that would mean right now we've got tripwires set on October 15th for an increase in tariffs, I think from 25 to 30% over on the 250 billion of imports.
That's right.
And then we've got the much more impactful, at least to U.S. consumers, set of tariffs that are set to come in on December 15th. And so this is, it's really raised the stakes for this upcoming round of talks. This round of talks is already beginning, obviously, on the staff level, and they just announced last night that it would be October 10th and 11th that the Chinese delegation would be coming to town. As we mentioned before, the expectation is there's pretty strong consensus in the market that this will be where they settle some kind of truce. Now, it's in terms of an off ramp, it's probably a rest area, not an exit. On the road to trade war. But still a rest area can be pretty refreshing.
Well, it would be. We know that markets are super sensitive to any negative signal and positive signals in the trade war. So, I mean, if it looks like even just pointing towards some kind of an agreement, the market will probably be out there, supporting. But it's not the only sort of Damocles out there on the trade front, too, that Trump has. By the way, like, of all the things that we could talk about, of what the president could do if the economy is coming off, if we're looking at below trend growth.
Right.
And there's concern about the global economy and Brexit and emerging markets slowing and the impact of the trade war. He actually has it in his power to do something about that. He would probably have if he would get some agreement with the Chinese, we'd probably see an immediate updraft in the market. We'd probably see some return to expectations, return on the business investment. There's a sense that there's some pent up business investment that we're not seeing. So I think the Fed is already accommodative also, and so but that's what he has in his powers. But he also has the power to go in the other direction, and the other direction is we have potential auto
right.
Tariffs sitting out there that could hit Europe. We have Brexit out there. We have uncertainty over whether the USMCA is going to get done. There's no other legislation out there. I think maybe potentially something on pharmaceuticals. There's no other big economic legislation out there that we should be paying attention to that might be disrupted by the impeachment proceedings.
Right.
So that's not going to have it. But the one thing that he could have an impact on is really much on the trade front. So I think all roads come back to trade and what he's going to do with trade.
Yeah, absolutely agree. And certainly there's been talk about what this might mean for 2020, but from the Wall Street perspective, the 2020 election is sort of beyond the investable horizon at this point. And so we've seen some flickers of reaction to some to some of the things that are going on, particularly the consensus building around doing something on healthcare, whether it's it doesn't we've seen healthcare stocks and underperformance based on that, but so much of the other considerations that are tied up in the election are just something that it's just too premature. It's just really hard to trade on it.
Especially this impeachment definitely is, especially because Biden's involved in the Ukraine. This is a clear positive for Elizabeth Warren, who has been very much rising in the polls, but that hasn't shown its face at all in the overall market. But one thing that people have watched is United Healthcare, and United Healthcare trades basically inversely with Elizabeth Warren's polls. So that is one stock where her rise has been negative for.
Yeah. And with that, why don't we take a break? Take our last break, come back with our segment, look ahead to next week. You're listening to the HPS Insight Macrocast.
HPS is seeking a mid-level public affairs professional to join our dynamic team. If you have 5 to 10 years of management experience in communications and you're interested in the topics discussed on the HPS Macrocast, this just might be the role for you. Apply today at hamiltonplacestrategies.com/careers.
We're back on the Macrocast for our last segment. We have a lot of data to look at next week. Obviously, it's always the mother of all jobs reports. We're going to be looking to see how that confirms or counters any of the data we've seen. But there's a lot before we get to next Friday's jobs report, Brendan. What else should we be paying attention to?
Yeah, it's definitely a big week, especially for global manufacturing purchasing managers index. So we get 2 out of China on Sunday night, one that's done by the government, one that's private. That's a great indication of how the trade war is affecting it. We also get another one out of Japan, the Tankan Index. And then in the United States, we get the ISM surveys. So one is manufacturing. It's a PMI. But then they also do a non-manufacturing PMI. The non-manufacturing, which is much more the service sector, has been holding up much stronger than the manufacturing side. But both are still in expansionary territory. Then down under, the Reserve Bank of Australia has an interest rate decision. Right now, they're at 1%, and it looks like consensus is expecting them to cut another 25 basis points. The Australian economy has definitely been negatively impacted by the kind of the slowdown in China. But the big event of the week is the U.S. employment report. So we kind of had a disappointing one in August. It was really basically 105,000 when you take away the temporary census workers, which will happen again. So we'll have to do it again next month in September. But for September, they're expecting about 162,000 growth in non-farm payrolls, and then the unemployment rate to stay steady here at 3.7%. So, I mean, obviously the employment number is kind of the most important, both for the market, but also, I suppose, for the economy. And I guess we're going to have Matt McDonald next week to kind of go through it.
We are. I will be in. I'll be in Taiwan. Speaking of one of the Chinas, I'll be in.
Be careful
Taiwan.
How you phrase it.
I know. I'll be in Taiwan next week. For me, so I'll be. I can't even figure out like the time. So that would be. I'm certain I will be sleeping when you'll be macrocasting. So Matt McDonald, the author of the HPS Insight Jobs. Jobs Day report will be sitting in as he often does on Jobs Day, but without me. But it'll be. I think there's a lot to talk about next week. I'm looking for a lot of signals out of that report, and you guys will have a lot to talk about in terms of looking ahead to China discussions, also, which will be coming the following week.
Excellent. So, all right, travel safe, Tony.
Thanks, guys. I'll see you when I'm back. Everyone have a terrific weekend. And you've been listening to the Macrocast. Tony Fratto in New York with Hamilton Place Strategies, John Fagan, Brendan Walsh in Washington, D.C. with Markets Policy Partners. Thank you. Have a great weekend.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share. Find more from Hamilton Place Strategies at hamiltonplacestrategies.com and follow Tony Fratto on Twitter @TonyFratto. Learn more about John Fagan, Brendan Walsh, and the work they do at Markets Policy Partners by visiting marketspolicy.com.